The reason crypto has continued to have lingering weakness is that market makers who play a critical role in crypto have weakened balance sheets from that liquidation event on October 10th. Now, market makers are essential to crypto liquidity. They're essentially acting like central banks because they provide liquidity, and their pulling back is the equivalent of QT for crypto.
They reported a surplus, which means liquidity is dried up. And if I go all the way back to the slide I presented here, again, the markets were front running the liquidity, the money that has to be printed, or else the entire global financial system is going to fall apart. And if that's going to happen, yeah, Bitcoin's going to go down, gold's going to go down, everything's going to go down, and we're all going to live through an incredibly trying chapter in humanity, which is maybe the case. I do not think that's going to happen. I think they're going to print the money. But they didn't. That's what this chart shows. Bitcoin was front running it, markets were front running it, and they did it.
On October 10th, the cryptocurrency market experienced the largest liquidation event in its history, with more than $19 billion in leveraged positions wiped out within 24 hours. Tom Lee explained that this massive sell-off was triggered by a combination of factors, including a sharp escalation in the US-China trade war, where President Donald Trump threatened to impose a 100% tariff on all Chinese imports. This announcement caused global markets to drop, but the cryptocurrency market reacted far more violently due to structural issues such as high leverage, thin liquidity, and flaws in trading mechanisms. Jack Mallers pointed out that the event began when the price of a stablecoin crashed to 65 cents on a major exchange due to liquidity problems, triggering an automatic deleveraging process that forcibly closed millions of positions. This cascade of forced liquidations overwhelmed market makers, whose weakened balance sheets left them unable to provide liquidity. Market makers act like central banks in crypto by ensuring smooth trading, but after the event, their pullback was akin to quantitative tightening, further pressuring prices. The consequences were severe. Bitcoin dropped 14%, Ethereum 12%, and many smaller tokens collapsed drastically. The incident exposed how fragile crypto market infrastructure remains compared to traditional finance, where safeguards exist to limit contagion. Both experts agree that this event still affects the market's recovery, with market makers' cautious stance creating ongoing selling pressure and reduced liquidity. This structural weakness continues to influence Bitcoin's price and overall market health today. As we bring you clips from Tom Lee's recent interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for tuning in. Enjoy the rest of the video.
I think the crypto market has been limping along since October 10th. Because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. Stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Brian, I'm I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening. I mean, for instance, in 1987, portfolio insurance was the quote glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi, where there is going to be code and there's going to be an error found, and you said it. Leverage is what's dangerous, and so investors should not be using excess leverage in crypto. Equities had a disappointing day. Nvidia reported good results, and stocks initially rallied 2% at the open, but at 10:36 a.m., markets peaked and staged a pretty sizable decline with a 3.5% decline into the close. And that took us down 1.6 for the day. Now, again, I think many people are disappointed because NVIDIA had great numbers. So what caused this reversal? Well, it's not always clear why stocks fall, but we do think there are 5 possible explanations for this. First, I think one factor behind the meltdown was that there were some tweets that created a little bit of outrage on social media. And it was President Trump responding to some Democratic veterans suggesting that they can ignore orders from Congress. And that first tweet was at 9:17 a.m. The second one came at 10:21 a.m. He said, seditious behavior punishable by death. Now, notice the timestamp. That's 10:21, and the market turned down just a few minutes later. That tweet led to Democratic Congress members and leaders protesting the death threats against Democratic members. Now, the second thing that I think did contribute to the decline is the release of the Epstein files. So President Trump signed the Epstein Files Transparency Act into law and now has ordered these files to be released. There's going to be a lot of people in those files. In fact, for instance, here's someone pointing out that it could even embarrass many donors, billionaire donors. So you can imagine there might be investors who are just nervous who's going to be on that list, and it's revealed. Does it do something to markets? I think that contributed to some of the nervousness today. The third factor is crypto. Bitcoin has been selling off recently and generally has led the equities, but you can see at the open, Bitcoin peaked and began to weaken at 9:30, and the S&P followed basically an hour later. This has been the case for some time. It's something I've pointed out, that Bitcoin has been leading the S&P. For instance, Bitcoin peaked on October 10th. That's right before we had that liquidity shock, which ended up being the biggest liquidity shock in the history of crypto, wiping out more than 2 million accounts. And Bitcoin's been falling since. But as you can see here, this has led to the S&P spider peaking on October 29th. It's something I was interviewed on CNBC today, and I mentioned that since October 10th, there was this feature called ADL that caused a significant amount of liquidations, and it was really due to a pricing error. But that pricing error has created significant holes in the balance sheet. In other words, The reason crypto has continued to have lingering weakness is that market makers who play a critical role in crypto have weakened balance sheets from that liquidation event on October 10th. Now, market makers are essential to crypto liquidity. They're essentially acting like central banks because they provide liquidity. And their pulling back is the equivalent of QT for crypto. So you can imagine crypto is suffering from tightening conditions along with a hawkish Fed. Now, in 2022, when a similar event happened because of FTX, it took 6 to 8 weeks to recapitalize those market makers and for market function to recover. So we're about 6 weeks into this process.
The crypto market has been weak since October 10th due to a significant liquidity shock that heavily impacted market makers, who are crucial for providing liquidity in crypto, similar to central banks in traditional markets. This shock, triggered by a forced liquidation cascade, forced market makers to cut back trading and reduce their balance sheets, which in turn pressured prices further. The process is ongoing and similar to a liquidity event in 2022 that took about 8 weeks to normalize, while currently, the market is 6 weeks into this adjustment. In equities, despite Nvidia reporting strong earnings and guidance, stocks fell after initially rallying. One factor in the market decline was social media unrest from inflammatory tweets by President Trump, including threats that caused political outrage. Another factor was nervousness over the pending release of Epstein files, which might implicate influential figures and create market uncertainty. Additionally, Bitcoin's recent price drop has been a leading indicator of market weakness, with crypto liquidity issues compounding pressures amid tightening conditions and hawkish Federal Reserve policies. Now, let's watch clips from Jack Mallers' podcast and hear what he has to say.
A fun fact for you guys, 60% of the Bitcoin owned today has been acquired above the price it is now. I'm going to repeat that again. 60, not 16, 60% of the Bitcoin owned today has been acquired above the current spot price now. So over half of the Bitcoin owners are underwater. And so sentiment feels really heavy. It feels really dark. There's a lot of people that either have not been through classic Bitcoin price action, an asset that can be this volatile, or they had expectations that Bitcoin was going to go to the moon much quicker. I hold the opinion that this is a price correction. I think we're setting up for new highs. I do not believe, as I've said on the show, that this is a 4-year bear cycle and we're in for 2 years of down. And I want to be able to explain that to you guys today and make my claim. And if I'm wrong, I'm wrong. But I feel very strongly and very convicted that I'm not. And so that's what today's rant will be. So this is a screenshot of what I posted on Nostr. If you guys aren't on Nostr, I highly recommend it. Think of it like a distributed Twitter, a distributed social media network. It's a place where you can't really be censored. And so my post read, beginning of the bear market or the setup for new highs? I make the case that Bitcoin is the only liquidity smoke alarm the US has left and is telling us there aren't enough dollars sloshing around the filthy fiat financial system. Team Red has to print a lot of money, and we will look back at this time as a buy the dip opportunity dressed as 4-year cycles. And so I also wanted to show you guys this tweet that I tweeted on X, the centralized social media platform run by Elon Musk. When did I tweet this? Friday? Saturday, maybe? I don't know. I've been all over the world recently, so my days are kind of getting lost on me. But it reads, gold making new highs tells you fiat is broken and governments have to print. Bitcoin selling off tells you the system will crack before they're forced to. Remember, Bitcoin is the only free market we have left, a liquidity smoke alarm revealing truths the system tries to hide. And so really what's baked in my thesis, in my viewpoint in regards to Bitcoin, is this liquidity smoke alarm idea. He said, the AI narrative is dead. Quantum and nuclear, forget about them. And crypto? Oh boy, crypto. Sell, sell, sell. I mean, after all, Dr. Barry is posting all kinds of screenshots of him channeled via Christian Bale. The rally must be over. Give me a break. Let me make this very simple. Take all your repo, your SRF, your SOFR mumbo jumbo, and cut through the crap. We had a $198 billion fiscal surplus in September. We should get the October number later today at 2 p.m. via the monthly treasury statement. We'll see what that says. But the one thing we do know about October, the government was shut down. This is an accounting identity. Fiscal deficits equal private sector surplus. We have had one of the driest periods for fiscal liquidity in months, if not years. The fact that markets and Bitcoin are still up where they are is incredible. The floodgates are now being opened. Post-Mamdani, the Donald J. Trump administration is going to unleash the tsunami of fiscal largesse in coming quarters. Midterms must be defended. The best signal for liquidity returning is Bitcoin. Bitcoin futures currently up over 1% today. It is leading the way. Next week or two could be choppy, but as liquidity comes in like a full moon high tide, so shall price action move toward that self-evident space on every beach where the ocean forces its way onto the shore. And he has a screenshot of the fiscal surplus. Now let's go back to the top here of Mel and break this down. First, he's citing all of the narratives. AI is dead. So what you're reading now about AI is that everyone's over-levered. It's a bubble. The dot-com bubble is bursting. Everything is, ChatGPT's numbers are overstated. Blah, 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 blah. Now, is that true or is that not true? That's not the point. The point I'm trying to explain to you guys is so many of you are tweeting at me like, Jack, is the world falling apart? Why is everyone saying my house is on fire? I just want to explain to you in plain English the narrative and dispel it. Now, you guys know how I feel. I think businesses need to be profitable. I believe in hard money. I believe in truth and reality and authenticity. Do I think Sam Altman is a lot of those things? No. But this is narrative purposes. Quantum and nuclear people are shitting on. People are now sell on Bitcoin. 4-year cycles, exit liquidity for the ETFs, all this bullshit, all this nonsense on Twitter. We'll get to the Big Short man in a second. But then he makes the point, we had a $200 billion fiscal surplus in September. We went over this on this show. I mean, the U.S. runs a $2 trillion deficit annually. In September, we had a surplus. And he makes this really astute observation. Fiscal deficits equal private sector surpluses, meaning when the government is running a deficit, it's good for the private sector. There's excess liquidity. They're printing so much money. The private sector can hire more people, launch more products, do more business. Earnings are always good. The opposite is true. If the government is running in a surplus, they're sucking liquidity out of the system. So as I've said, guys, if you come September, we had a $200 billion fiscal surplus. So that's 10% of our annualized deficit. We operated in a surplus. And then in October, we shut down. So the biggest economic participator in the world, the United States government, operated both in a surplus and didn't operate it at all for 2 months straight. If you rewind to before all of that, Bitcoin was at 125,000. So the point has to be understood in simple terms. This has been one of the driest liquidity spells in years. Elon Musk Doge austerity, trade wars, Fed fighting with the Treasury, and then a fiscal surplus combined with a government shutdown, with the TGA now at $1 trillion balance. And so he makes the same points I do, is that the blues are beating the shit out of the reds right now. Trump's approval rating is as low as it's ever been. Why do you guys think Trump's bringing up stimulus checks? So Bitcoin is the liquidity gauge. It's the smoke alarm. It's the sponge. So again, going back, this was the tweet I showed you guys in September, or well, I guess it would have been early October, is that the U.S. Besant reported this $198 billion surplus. Now, at the time, I called it, financial accounting gimmicks. Definitely was. We didn't. I mean, we run a $2 trillion deficit. So if we had a month of a surplus, then we have another month where the deficit's twice as large. So this was definitely marketing gimmicks, but nonetheless, it wasn't fraud. They reported a surplus, which means liquidity is dried up. And if I go all the way back to the slide I presented here, again, the markets were front running the liquidity, the money that has to be printed, or else the entire global financial system is going to fall apart. And if that's going to happen, yeah, Bitcoin's going to go down, gold's going to go down, everything's going to go down, and we're all going to live through an incredibly trying chapter in humanity, which is maybe the case. I do not think that's going to happen. I think they're going to print the money. But they didn't. That's what this chart shows. Bitcoin was front running it, markets were front running it, and they did it. And so this is the fact that they ran this surplus.
Jack Mallers explained that 60% of Bitcoin currently held was bought at prices higher than today's spot price, meaning most holders are underwater, which weighs heavily on market sentiment. Many investors either have not experienced Bitcoin's typical volatile price swings before or expected rapid gains. He described the current drop as a price correction, expressing confidence that new highs are ahead and rejecting the idea of a prolonged bear market lasting years. Mallers used the metaphor of Bitcoin as a liquidity smoke alarm for the U.S. financial system, signaling a shortage of dollars in the fiat money system. This alarm suggests that substantial government money printing is needed, framing the current dip as a buy opportunity masked as typical market cycles. He pointed out contrasting narratives, noting skepticism about AI, quantum, nuclear, and crypto sectors, but emphasized facts like a $198 billion fiscal surplus in September, despite a large annual deficit. This surplus means the government was actually absorbing liquidity, which limits private sector resources. The following government shutdown further tightened liquidity. Despite this, Bitcoin's price remained strong, indicating resilience and acting as a leading liquidity indicator. Jack Mallers suggested that upcoming government fiscal actions will unleash more liquidity, boosting markets, with Bitcoin futures already showing gains, signaling a potential shift in financial conditions. He emphasized focusing on real economic factors amid noisy market narratives and social media chatter. This perspective echoes historical patterns, where Bitcoin corrections can lead to major recoveries, and liquidity conditions strongly influence price trends. Such analysis underlines the importance of understanding fiscal policy and liquidity flows when assessing Bitcoin's movements. Given the challenges faced by market makers and liquidity in the crypto market, how do you think these factors will influence Bitcoin's price and the future of digital currencies? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.